This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordis. Thanks for joining us at XM.com. Worries around higher interest rates being on the horizon have returned to torment Wall Street once again after some shockingly strong inflation numbers out of America. Consumer prices clocked in at 4.2% on an annual basis in April, exceeding the wildest forecasts among economists and reigniting the debate over when the Fed will begin to turn the cheap money ship around. Markets were blindsided, and the response was fierce. The dollar got its magic back, and stocks were steamrolled as investors recalibrated the timeline for monetary policy normalization, with euro-dollar futures contracts pointing to an almost 80% chance for a rate increase by December next year. But for all the enthusiasm, this isn't quite enough to jolt the Fed into action. Inflation might be showing its teeth, but the labor market is still stuck in low gear. We had a massively disappointing jobs report and then a scorching hot inflation print, which in a sense cancel each other out in the Fed's eyes. The casting vote will be tomorrow's edition of retail sales. It will either calm some nerves or truly open the trapdoors for a summer Fedache. The turning point might be in late August at the Jackson Hole or the September FOMC meeting. Until we get closer to that point, it's difficult to envision any tremendous dollar strength or a real implosion in stocks. The liquidity taps are still wide open. Futures point to another lower open on Wall Street today as the shockwaves continue to reverberate. And with yields on Treasuries rising in tandem as investors dump bonds to shield their portfolios from the inflationary nova, it seems that many players are simply moving to cash. Even commodities are trading lower, which implies there's no place to hide for now. Gold got hit by the spike in real yields yesterday and the resurgent dollar. Still, an environment of rising inflation and still loose monetary policy is great news for the yellow metal, which could continue to sparkle until the Fed actually pulls the QE plug. Aside from the dollar, the FX market has been exceptionally quiet. There's been a clear disconnect lately, with currencies being mostly immune to the troubles in stock markets. This was today's Daily Market Comment. Thanks for joining us at XM.com.